Good morning. It's Leap Day, February 29th, 2016. We'll start out by looking at the weekly. The measured move short that we're still in, barely, is still forecasting a first target of 1738.19. In terms of the long, all we have is this. We haven't retraced into that because when we draw a measured move like this, we only have a valid target down here of the 1885 on this bar, not this bar, although it would be possible that within this bar there would be an explanation at a lower time frame, as we can see by going to the daily. That never really happened. Let's go back to the weekly. What we have using this bar, and there is an explanation for this bar, it just is in a lower time frame. I'm not going to bother finding it. The move from here to here basically catches at 1927.75, and we caught that move exactly. So we can regard that as a relatively valid move. Let's go to the daily. In terms of the daily, from a canonical point of view, the only catch of that bar that we could find in the lower time frame is this measured move from 1847 up to 1943, predicting a first target which we can see was hit. After that first target, we've had a retrace. As we can see, drawing the measured move short, we haven't retraced, at least on the daily time frame, into a short yet. We came up just about to that. Let's look, see what that would be. Extend that to the right. We can see that that's 1948.25. We came as high as 1947. So about 1.25 points short of that this morning. You can see we're currently in a retrace off that high. As far as other moves other than this first target, we're going to take this. Oh, this one just explains this move, but essentially by going lower here, that takes that move off the table because it's violated. So that's a little less complicated. We have this move that catches this from an extension point of view. So we talk about basically moves on the right hand side, the main one in this case being this one, and any moves with inside this is basically helper moves. We see that the helper move dominated here. This extension does explain this low. My reason for using this is basically I know that in a lower time frame that traditionals started off of this gap, and so I could be using either here, which obviously doesn't catch it. I could be using here. Oops. I could be using here, which also doesn't catch it. So that leaves me with the one that I'm using on the left-hand side to explain this. In this time frame, we're forecasting, if this continues to hold this morning and starts up some longs and does result in a reversal, we have in this time frame a prediction of 1986.69 for that move. And using the helper slightly higher at 1988. Now I want to do some gap analysis here just to see what's going on from a gap point of view. This is the continuous contract and 24-hour continuous contract, which only has this gap, which was basically a real gap in the 24-hour contract. We have other gaps from the intraday. We can see that this gap has been filled on this dip. We're left with this gap right here and this gap right here as anomalies. Switch back to the continuous 24-hour. Okay, now I want to go down to the 4-hour. You can say that we have a relatively complex explanation of this move, and that's basically caused by the gaps. Although they don't show on this continuous, only the gap that we saw in the 1 day or in the daily is apparent here, but still these gaps affected all of these moves. Again, this is an extension that was used. Obviously extensions started all the way down here. So if we were looking at this from the point of view of the canonical retracements, which this didn't hit, we would be looking at either here to here, which we would have a long ways left in a short, or where extension started, which was here to here. Again, we have a considerable distance left in a short to get there. That leaves us with an explanation of a previous extension. And that's the justification in the daily for this same extension. A little bit better justification in the 4-hour time frame. We can see if we extend this to the right, that this is used, and again, to the tick, the inner measured move is used for the halfway back. Again, we can get rid of this because it's violated. So, at this point, we had a choice of basically, since this was straight down, we had a choice of either here or here, which we see doesn't catch this up move this morning, or finally here, as potential shorts, there being no other explanations in this straight down move for a short. In this particular case, you can see we traded in to that short on the 4 hour, and we're projecting in the 4 hour, if that short continues to hold, a continuation short to 1920.85. Let's go down into the 15-minute. Again, you can see that in this short, if we just look at this, we have a relatively complex explanation with some traditionals starting this out. Logically speaking, one of these in the 15-minute would be an explanation of this short. And in fact, this one is. We'll leave it up here for now. Actually, I'm going to take it off because I want to do some other analysis. We see that there was this traditional, and several others, but all of a sudden at some point we started using this extension. We can see that if we go to that extension, after this point, there was nothing that actually traded into that. So why it was used, I can't really say at this point. Again, there's just some complexity to this, and you just have to look for answers. In any case, this was used once. Down to here. It was used twice, catching this bar right here. And from a canonical point of view, since extensions here traded, let's go ahead and extend this to the right. You can see that we're still trading into that extension short. In the 15-minute time frame, predicting relatively the same as the 4 hour, a little less, at 1921.32, at least from a canonical point of view. I want to continue to have that so that I know, since this has been significant 3 times, that our first indication, or one of the indications of a reversal in the series of indication, is the break of the first extension. That hasn't occurred yet, so we would want to place an alert here at 1944.59 to indicate that another step in a reversal has taken place. The final step in a reversal is the all the way halfway back, the canonical being the one that I just showed at 1944.59. The next canonical, the halfway back of the whole move, is violated at 1953 and change. Again, if we back into this traditional, which I showed a minute ago, which also catches this move and projects $19.20.79 as a low, slightly more than the 1921. Let's just go back to the 4 hour, see if that's the same or close to the same. Yep, within 100th, or yeah, 100th. So basically that those two agree. Back to the 15-minute, we want to talk about a potential reversal. I have this as a measured move that went into first and second targets. But as you can see, that does not explain these lows right here. So I will just show you why I use this move in the 5-minute. In the 5-minute, you can see this was a swing point high. Basically, you can see sort of a price discovery where this is the outer bar and these are bars that are contained in here, followed by a retrace into this measured move short, which did basically initially, until we hit this low, go right into the second target, which in my mind justifies this move. Let's go back to the 15 minutes. We want to find the move that justifies this low, using this as a swing point high. And I'll just use this as my first guess. And as you can see, that does explain this move, with the first target at 1942.18 and the second target almost at the extension violation of 1944.46, just a slight bit lower than that. So the second target is still, if it's hit, is still predicting this. We're in a retrace right now. I'm not, since it's really, we can't see any necessarily bottom here. This could be a bottom. I'm not gonna, well, we can go ahead and just see if same anchor to new high, which, excuse me, since we haven't exceeded the second target, that justifies that. And thus far, that does explain this measured move predicting a violation into an open like this. It's interesting. We don't really know what's going to happen into the open. We'll just talk about that for a minute. We have a couple of fairest prices for a couple of days that are still anomalies. We traded into and beyond this one last night, so we want to continue to watch this 1930 as a possible retrace that we might move into this morning. We have been for a long time getting initial trading into an initial short in the morning. Obviously during this run we kept going short. Certainly with this extension, it's certainly possible that we do, but this would be a place to look for a move long in this area if we get a significant retracement. Of course, the halfway back at 1935.63 is a significant place as well. So this morning we want to look at 1930 and 1935-63 if we have continuation on this short as possible potential longs. Cancel that extension. The other place that we want to look at as a potential watershed point if we go into longs is this 8 wide ferrous price from Friday at 1951.50 as a potential place that will divide more longs or more shorts. I think that's a wrap for this morning.